The story of insurance in India, it's not just about policies and fine print. It's this incredible story of a giant pendulum swinging back and forth. It's a journey that starts with colonial rule, swings all the way over to total government control, and then back again to the open market we see today. So let's dive in and unpack how this all happened.
So here's a question for you. Have you ever wondered who actually wrote the very first insurance policy in India? The answer to that question, well, it pretty much sets the stage for everything that comes next. A whole century of change and, frankly, a lot of conflict.
All right, so our story kicks off way back in the early 19th century, during the time of British rule. See, insurance wasn't really a homegrown idea here. It literally arrived on British ships. It was an import, brought over by British companies, mainly to serve other British people. And right from the get-go, that created a pretty big problem.
This timeline here, it tells you everything you need to know. The first life insurer, Oriental Life, opened its doors in 1818. But now look closely at those dates. It took over 50 years, more than half a century, for the first Indian-owned life insurer to even get started in 1870. That gap just goes to show you how completely dominated the market was by foreign players.
And this foreign dominance led to a system that was, let's be honest, completely unequal. The British-owned firms basically decided that Indian customers were a higher risk. What did that mean in practice? It meant an Indian person just couldn't get the same deal as a British person living in the same place.
Just how different was it? Well, on average, Indian policyholders were charged a surcharge of up to 20% more for the exact same coverage. A whole 20% extra. This wasn't some hidden fee. This practice of differential premiums was totally standard, and it really laid bare the inequality baked into the system.
So with all these different companies and basically no rules, the industry was, well, it was a bit of a mess. The first real attempt to bring some order to the chaos was the Insurance Act of 1938. This was huge because for the very first time, it created a single set of rules to govern both life and general insurance.
Then came India's independence. And that pendulum we talked about, it swung back hard. All those issues with foreign control and unfair pricing led to a pretty radical solution. The government decided it was going to take over the entire industry. The whole thing.
245. Just let that number sink in. That's how many different private life insurance companies were operating in India at the time. It was a super fragmented market, with a mix of Indian and foreign firms all competing. And then, poof, in one single sweeping move in 1956, the central government just took them all over. Every single one. It was a complete and total nationalization of the entire life insurance business.
So what happens when you merge 245 different companies into one? You get a state-owned giant. And that's exactly what they created, the Life Insurance Corporation, or LIC. For decades after this, LIC was the only company you could buy life insurance from in India. A true monopoly was born. And you know what? The story was pretty much the same for general insurance, the kind that covers your car or your house. Before this all happened, there were 107 different companies in that space.
Yep, following the exact same playbook, the government nationalized the general insurance business in 1973. All 107 of those companies were brought under government control and consolidated. These companies were all merged and reorganized into just 4 state-owned giants, all operating under one big umbrella called the General Insurance Corporation, or GIC. And with that, the project was complete. The entire Indian insurance industry was now controlled by the state.
So, problem solved, right? The issue of foreign control was gone. But this created a whole new kind of problem. With no competition, you get stagnation. Decades of a state-run monopoly meant very little innovation and even less choice for the customer.
I mean, just think about what this actually meant for people. For decades, if you needed life insurance, you went to LIC. Period. That was it. For anything else, your car, your home, your health, you had exactly 4 state-run options to choose from. This was the reality for millions of Indians for nearly 40 years.
But things don't stay the same forever. By the early 1990s, India's whole economy was starting to open up, and people started calling for big reforms in the insurance sector too. It was time for that pendulum to swing back once again, this time towards competition and liberalization.
Now, this didn't happen overnight. It was a really careful, step-by-step process. It all started in 1993 with something called the Malhotra Committee, which recommended opening up the market. That eventually led to the big one, the IRDA Act in 1999, which created a brand new, independent regulator. And by the year 2000, that regulator, the IRDA, started handing out licenses to private companies for the first time in a generation.
And that wave of reform is what created the modern Indian insurance market that we all know today. It's dynamic, it's competitive, it's regulated, and it looks absolutely nothing like the monopoly era.
And if you want to see just how much things have changed, look no further than the rules on foreign direct investment. When the market first opened, foreign companies could only own up to 26% of an Indian insurer. Then, in 2015, that went up to 49%. And today, it stands at 74%. Each one of those jumps was a clear signal that the market was opening up to the world.
So, where does that leave us? Well, today's market is a real hybrid. You've still got the public sector giants like LIC and those big four general insurers. They're huge players. But now they have to compete with dozens of private Indian companies and big international firms. And watching over all of it is the regulator, IRDA, making sure everyone plays by the rules.
So, from a discriminatory colonial market to a total state monopoly, and now to a competitive, regulated system, it has been an incredible journey. The big question now is, what's the next swing of the pendulum? Are we going to see even more new companies and fiercer competition, or is the market going to start consolidating? That's the billion-dollar question. Only time will tell.